Good day traders, it's Monday, October 9. This is Alan Hong, market analyst of GKFXPrime. So I'm gonna share my daily analysis through this video. And first of all, let's review the major market movements. So first instruments we're referring is the dollar index in 4-hourly chart. So the US dollar index was turned lower against a basket of other major currencies, down 0.16% and 93.62 on late Fridays, after hitting a more than 2-month high of 94.1 earlier in the sessions. So amid the fresh worries over tensions with North Korea giving up early gains made after the US jobs report for September show higher than expected wage growth. So the dollar was felt following its reports on Friday that North Korea is preparing to test a long-range missiles. This was adding to fears over a potential conflict in the regions, and the dollar earlier rose as the wage data from the US jobs reports for September was seen as potentially boosting inflation. According to the Labor Department's reported, the US economy lost 33,000 jobs in September, ending 7 straight years of job growth, but the decline was driven by slower hiring due to the effects of Hurricanes Irma and Harvey. So the unemployment rate fell to 4.2%, the lowest level since 2001, and average hourly earnings rose 2.9% from a year earlier. The uptick in wage inflation was bolstered the expectations that the Fed rates of high interest rates in December, and the expectations that US rates will rise helped support the dollar by making US assets more attractive to yield-seeking investors. As for the sterlings, the Great British Pound against the US dollar was down 0.4% at 1.3065 on late Friday and ended the week down 2.47%, which is the largest weekly decline in more than a year after a chaotic Conservative Party conference cast the premiership of Theresa May in doubt. So with political intrigue set to continue, the Brexit talks restarting and manufacturing data due, strategists anticipate another volatile week and investors in the options markets have turned bearish. Meanwhile, May could be planning an overhaul of a team of top ministers soon, the Sunday Times reported. So on Friday, Theresa May told reporters that she had the full support of her cabinet, although the ex-Tory party chairman Grant Shapps said 30 members of the party were willing to sign the letters calling for her to resign, and this falls short of the 48 signatures needed to launch a leadership challenge. And May will reshuffle her cabinet after an October 19 to 20 summit in Brussels, and this was reported by the Sunday Times and citing unidentified party sources. So with Brexit talks still to start again this week, 1 week volatility on the pound is higher than 1 and a 3-month gauge, so that suggests investors see more dramatic move of sterling in the near term. Meanwhile, 1 week risk reversals have turned bearish on the currencies, so the market will also be awaiting any further clarity on the Bank of England's thinking, having priced in an interest rates hike in November, and this week's data will provide investors with the latest evidence of both how likely the bank is to tighten policy and whether it would be right to do so. So with industrial productions and house price key. The Aussie has rose in Asia on Monday, traded at 0.7777 and up 0.14% ahead of a light regional data day with China Bank from a week-long holiday and markets shot in Japan, Taiwan and South Korea as tensions on the Korean peninsula brew with speculations of a long-range missile test ahead. And in China, the Caixin Services PMI is still with a forecast of 53.1 for September. As for the safe haven Japanese yen, the dollar was last traded at 112.58 against the yen, steady on the date, and since Japan is the world's largest net creditors nation, traders assume Japanese repatriations from foreign countries will eclipse foreign investors' selling of Japanese assets during times of heightened economic uncertainty. So this means that yen has continued to behave as a safe haven currency despite Japan's geographical proximity to North Korea. As for commodities markets, gold prices rebound from 2 months lows on Fridays, settle up 0.48% at $1,279.26 as fresh concerns Over tensions with North Korea pressured the dollar lower and bolstered the safe haven demand for the precious metal. So the dollar fell following reports on Friday that North Korea is preparing to test long-range missiles, adding to fears over a potential conflict in the regions. And a weak dollar makes gold futures, which are denominated in the US currencies, cheaper for foreign buyers. So the dollar earlier rose as higher than expected wage growth in the US jobs report for September was seen as potentially boosting inflation. And the uptick in the wage inflation bolstered the expectation that the Federal Reserve will hike interest rates in December. So gold price is highly sensitive to rising rates, which leave the opportunity cost of holding non-yielding assets such as bullion, and while boosting the dollars in which it is priced. As for the oil price, it was plunged on Friday with the West Texas Intermediate crude price sank $1.50 or around 3% to end at $49.29 a barrel. So snapping about the weak bull runs amid renewed oversupply concerns, with investors' attention shifting to potential disruptions to crude productions and refining capacity in the Gulf of Mexico as tropical storm Nate bears down on the regions. So the Bureau of Safety and Environmental Enforcement estimated that approximately 1.2 million barrels per day of crude oil production had been shut in by operators ahead of the storm, and which was expected to become a hurricane by Sunday. So the US Gulf is home to around 70% of the country's crude oil production, while more than 45% of US oil refining capacity is along the Gulf Coast. So prices were supported earlier in the week as traders weighed the likelihood that OPEC-led production cuts will be extended through next year in the wake of a meeting between Saudi King Salman and Russian President Putin in Moscow. So the original deal struck nearly a year ago between OPEC and 10 other non-OPEC countries led by Russia was to cut productions by 1.8 million barrels a day for 6 months, and the agreement was extended in May of this year for a period of 9 months until March 2018 in a bid to reduce global oil inventories and support oil prices. So the cartel's next meeting is set for November 30 in Vienna. So now we're going to review the highlighted economic data that released on Friday as well as the focus data and events for today, Monday. So on last Friday, United States, the Labor Department has released a series of job reports including the average hourly earnings, non-farm payrolls, and unemployment rates. So this mixed report indicates that the job market in the United States is growing. Okay, so it's just that the non-farm payroll was impacted by the tropical storms Harvey and Irma. Alright, so besides of United States, Canada has released the employment change for September, and it was at the result of 10,000, which is lower than the forecast of 14.5 thousand. Right, so besides of the employment change, we have IV PMI from Canada as well for September, and it was pointed at for 59.6, which is better than expectations of 57.2. So the last data on Friday is the US Baker-Hughes oil rig count, and it is 2 more decrease compared to previous 750. So the result was at 748. As for today, Monday, China was released the Purchasing Services PMI, so Purchasing Manager Index for September in China, okay, was at 50.6, which is disappointed when comparing to the forecast of 53.1. So during the European trading hours, investors could focus on the German industrial productions, okay, which expected to grow better than previous with 0.7% growth. It's a technical analysis session, and first instruments were referring to the Great British Pounds against the US dollar in 4-hourly charts. So the sterling extended losses and suffered the largest weekly decline in more than a year after a chaotic Conservative Party conference cast the premiership of Theresa May in doubt. So the pair GBP USD continued its downside after a closure below the Fibonacci retracement level of 50 at 1.321. So which is the trend directions of shifting freehold. So the both moving average line showing 4-hourly charts remains expanding downward, signals to extend the downtrends and move further lower towards the next support level at 1.297. On the upside, the nearest resistance levels could refer to 1.311. These single currencies rebound from multi-month lows following a retracement in the dollars, but however, EUR-USD pair remain traded in a downtrend structures, suggested by the both moving average line and 4-hourly chart, which continue expanding downwards. So with another closure that below the support level of 1.167, we're suggesting for further downsides, then we could expect it to drop further towards the next support level at 1.16. And as for the upsides, the first resistance level comes in at 1.17. While Germany is due to release its industrial production data later today, and investors will take it as the indications on the economic strength of the largest income country is in the European Union. The Kiwi has extended its downtrends and fell below the support level of 0.709. So the both moving edge lines in 4-hourly charts will remain expanding downwards, signals to continue the downtrends and fall further towards the next support level at 0.698. So on the upsides, we could refer back to 0.709 as its first resistance levels. So investors will eyes on the retail sales figure due tomorrow Asia hour. This release provide information on the number of value of electronic card transactions with New Zealand-based merchants. So the figures give hints of strength in the retail sectors and influences interest rate decisions. The Aussie was rose highest in Asia on Mondays ahead of a light regional data day, with China back from a week-long holiday and markets shut in Japan, Taiwan and South Korea, as tensions on the Korean peninsula grow with speculations of a long-range missile threat ahead. So the pair AUD-USD rebounds from the Fibonacci retracement level of 50 at 0.773, so the trend direction shifting threefolds. But however, the both moving average line in 4-hourly charts has formed a dive cross, signals for further bearish, and thus with a closure below the 0.772 we're suggesting to drop further towards the next support level at 0.764. On the upsides, the first resistance levels could refer to 0.781. While the National Australia Bank is due to release its business confidence index tomorrow during Asia hours, so the index rates the current level of business conditions in Australia, and changes in business sentiments can be an early signals of future economic activities such as spending, hiring and investments. So the index is based on data collected from a survey of around 350 companies. Besides that, Assistant Governor of Reserve Bank of Australia, Debel, will be delivering speeches tomorrow, and investors will eyes on it for indications on monetary policy and economic outlook of the Reserve Bank of Australia. So the dollar was traded steady against the safe haven yen on Mondays. Since Japan is the world's largest net creditor nation, traders assume Japanese repatriations from foreign countries will eclipse foreign investors selling off Japanese assets during times of heightened economic uncertainty. So this means the yen has continued to behave as safe haven currencies despite Japan's geographical proximities to North Korea. Thus, the US dollars and Japanese yen pair are expected to drop further with a closure below the support level of 111.9, and the next support level we could refer to 111.1. As for the upsides, only with a closure higher than the previous high at 113.5 will open up a door for more bullish. And while Japan is due to release a series of economic data tomorrow during the Asia hours, including a speech that will be delivered by the Bank of Japan Governor Kuroda. Thus, the safe haven Japanese yen is expected to have higher volatility on Tuesday. Commodities, the gold prices rebound from 2-month lows on Fridays as fresh concerns over tensions with North Korea pressure the dollar lower and bolstered the safe haven demands for the precious metals. So looking into 4-hourly charts, the price trade back to the level near to Fibonacci retracement level of 50 at $1,280 a troy ounce. But however, it is considered remain in the downtrend structures, thus it is suggested to drop further with a closure below the support level of $1,262. Then we could refer to the next support level at $1,238. On the upside, the nearest resistance level can be seen at $1,300, and which is the strong psychological resistance level for the precious metal. As for the oil price, it was plunged on Friday with the West Texas Intermediate crude price sank $1.50 a barrel, or around 3% to end at $49.29 a barrel, so which was snapping a multi-week bull run amid renewed oversupply concerns, with investors' attention shifting to potential disruptions to crude productions and refining capacity in the Gulf of Mexico as a tropical storm bears down on the regions. So the West Texas Intermediate crude price pressures to the level near to Fibonacci retracement level of 50, and the trend direction shifting freeholds, so closing below this level will suggesting to shifting trend directions and lead to drop further. So the next support levels can be seen at $48.40 a barrel, and as for the upside, we could refer to the psychological resistance level of $50 as the nearest resistance. That's all for my analysis to date. Please don't forget to subscribe to our YouTube channel by clicking the GKFXPrime logo on the screens in order to follow our updated analysis and education video. Thank you for watching.
GKFX, your global trading partner.